So let's get into it. Now, we're here today to discuss a topic that's been front of mind for many of us, and that being embedded insurance, and a topic that's particularly close to the hearts of our friends at Element, who have very kindly helped us bring today's session together. So thank you, Eric and Jan and the team. And there are really many compelling reasons why, perhaps. So whether that's a share of an estimated market set to grow in excess of $700 billion by 2030, or perhaps it's the entrance into the insurance market, the likes of Amazon and Tesla, or maybe it's to meet the customers' evolving expectations of how and where they buy insurance. But however the headlines frame it, the challenge remains, and that being, how can you tackle the opportunities that embedded insurance represents? Well, to help answer that question, I'm delighted to be joined today by a panel of absolute experts who will help unpack this and no doubt provide the benefit of their practical experience too. And I guess this practical experience is particularly important if we're considering the title of this session. So let's get started with some good old-fashioned introductions. And Eric, given that you're CIO of a business that's operating at the front line of this trend, would you mind kicking us off and give us a quick intro to who you are, what you do, and why you're here today?
Excellent. Yeah, thank you so much, Matt. And yeah, my name is Eric Schuh. I'm one of the board members of Element Insurance. I am an insurance person, I guess, for 20 years already, starting from being an equity analyst for insurance stocks and done a lot of communication and finance roles in insurance, and have been with a few reinsurers for many years, but often also in roles that involve a little bit of, let's say, entrepreneurship and sort of the newer things that we're doing in the industry. And I joined Element last year as somebody who has done the things that Element does as an independent B2B insurance company that offers wide labeling products to its partners and clients, who has done that also in larger corporates and so on. So I would say I'm a true believer in embedded insurance and the digital and marketplace future of our industry, and I believe, contrary to many commentators, I actually think the industry is all on that super highway into that future. It's just everyone is traveling in a different vehicle, right? So we are reasonably pure play. This is what we do. This is what we're there for as Element. And others, have in-house ways of addressing this, or partner with other players. I'm very excited to see how our sector is becoming more and more of a marketplace, working where industry boundaries are blurring a little bit, and where hopefully we will be able to address the obviously existing protection gaps of today even better than we've been able to in the past. In other words, selling more insurance, both for risks today that have proven to be tricky to be insured, but also for all the new risks that are emerging on a daily basis, and that we don't even know yet maybe today, but some we do, and we don't insure them well enough, like cyber and whatever else will come. So I'll maybe leave it at there as a very elaborate introduction of what I'll stand for today.
This is possibly a good segue into one of our first questions as well. So brilliant, nicely teed up. Wonderful, thank you. And Sabine, over to you, please, if you would.
So good afternoon or good morning, everyone. I'm Sabine VanderLinden, CEO and managing partner of Alchemy Crew. Alchemy Crew is a venture lab. We work with established players to help them accelerate the way they partner or invest in growth ventures. We believe, why build when you can partner? So this is my motto. And when you look at embedded finance, embedded insurance, this is probably the moment to really understand how that plays into the insurance sector. We have seen a lot written about the topic in recent months, past 2 years. Embedded insurance or embedded finance is not new. Embedded finance has been going on for at least 10 years. And now I guess it's coming into insurance, and hopefully as well as within the subsector of insurance. So I'm privileged enough to be able to look at the future, Horizon 2, Horizon 3 problems that insurers want to share with me. And with my team, we help to solve those by identifying potential partners that the companies may want to work with.
Wonderful. Thank you, Sabine. And Yuri, how about you?
Hi, Matt. Thank you. Hello, everyone. I'm Yuri Poletto. I'm an insurance innovation advisor and founder of the Open and Embedded Insurance Observatory. At the Observatory, we do two things. We do research on the topics open insurance and embedded insurance, and we give back the insights developed through the interviews and the researches to the members of the Observatory, outside the Observatory to the market. And we like to think to us also as promoters and facilitators of the adoption of open insurance and embedded insurance. Obviously, I agree with all the good things that have been said so far about embedded insurance. Big trend, huge trend, not something that is going to end this year or next year, something that is here to remain. I'm not saying that only myself, but this is what the many members of the Observatory say, and I'm talking about multinational insurance or insurance groups. They believe that embedded insurance is probably the most interesting and the most potential trend that has ever impacted insurance distribution, something that can help them to grow organically, and something that can have the potential to contribute to reduce the protection gap that is a big issue for our society, for our businesses. And yeah, happy to be here and to contribute to this discussion.
Fantastic. Thank you, Yuri. That's great. Well, listen, and again, a very big thank you to you all for your time. Let's maybe start off with first question. And I guess let's start. Look, we all recognise that embedded insurance is a topic of interest. It's here to stay. But maybe let's start with a little bit of context. And what are some of the market conditions that are moving in favour of embedded insurance and its growth? And Eric, maybe we hand over to you as you so eloquently introduce some of those topics, both the sort of near-term ones and potentially looking to the future a bit as well. And yeah, maybe set a good backdrop for subsequently exploring some other aspects. Okay,
so I will not comment on the partnering aspect, because I think Sabine made the point as well, and I couldn't agree more that the vertical integration in the insurance industry is just very, very high. Also the horizontal one, by the way, much higher than in other industries. So I think the amount of partnering that can still be done and outsourcing versus other industries is obvious. I would like to highlight an area that is also a well-known one. Everyone has been talking about ecosystems for a long time, and it is a topic that normally it's like the first one who mentions ecosystem is the but the point is, actually it's true, isn't it? It is actually happening, right? This is what is changing the industry boundaries that we know. And just because there's a banking industry, an insurance industry, an automotive industry, it's not like those were God-given. Those were the ecosystems before, right, that emerged. Like, it's not like the automotive industry wasn't a tire industry before and a metal industry or whatever, right? And then it forged a new one. Now it's changing again, and these new ecosystems will have orchestrators. I am not a big believer in insurance companies being big orchestrators of these ecosystems, except for certain specific cases. But I believe in insurance companies being big players and contributors in these ecosystems. And embedded insurance, of course, is a perfect way of becoming, in the insurance part, a meaningful insurance part, not necessarily an easily replaceable one even, part of an ecosystem that is orchestrated by, for example, automobile manufacturers when it comes to mobility, or health, when it the health care industry, and so on. We can take advantage of these industry boundaries blurring and become maybe a smaller fish in a bigger pond, but in a very attractive pond than our own industry. In that sense, I believe that insurtech, and we are an insurtech, we're an insurance company, but we would call ourselves an insurtech, doesn't necessarily mean that the tech has to come from the insurance company itself. The tech can come from something else, and we add the insurance element to it, embedding it into whatever that ecosystem is doing to people. So to me, this is one of the obvious megatrends that calls for us as integrating our solutions in a very smart way.
Well, what a way to kick off the discussions then. So much in that already to dive into. I wonder actually, Sabine, whether you've got we sort of finished there on the role of technology to support that, and you'd mentioned specifically the role of partnering and your take on that. Could you give us a view on its significance in those trends?
Sure. So let me come with some numbers. So, earlier this year, I wrote an article around the trends coming into our industry. And what you do at Christmas, whilst you're having your Christmas pudding, I actually read, insurance stats. So
don't we all, Sabine? Don't we all? Come on.
So actually, when you define embedded insurance, I had to go and start. Where did we start? So I look at embedded finance. So today, and I look at the numbers from an investment angle, because I think when investors put money into a specific sector or specific technology, it allows for technology to become much more commoditized, but also it's a sign there is a trend and therefore an opportunity to win. So when you look at embedded finance, there is around $35 billion which have been invested in embedded finance startup, and embedded finance startup include insurtech, health tech, other sub segments. A lot of this investment went into lending and payment. And when you start looking at where this is, it goes and range actually equally between Europe, United States, and Asia. So when I used to look at insurtech, 45% of the investment came from the United States, 30% from Europe, and 21% from Asia. What you see with embedded finance startup and where the money is going is pretty much aligned. Another actually trend, which I think is very important, is when we started talking about embedded insurance a couple of years ago, I heard some insurers saying, well, it's about affinity, Sabine, we're already doing this. Well, I think things have changed a little bit. For sure, you have the ventures focusing on sales and distribution, so embedded themselves in maybe somebody else's value chain and distribution channels. But I think things have changed, and probably it's what Eric is trying to say as well. You have to look at embedded insurance or embedded finance from an infrastructure as a service viewpoint. In finance, you will think about your Stripe. You can also look at it from a digital ecosystem viewpoint, which means that you cannot succeed on your own anymore. And what that is also saying is, where is the position of insurance? Is insurance only focusing on risk mitigation and risk prevention, let's say? Because that means also that you have to partner with adjacent sectors. So when you look at embedded insurance as to what that means for us tomorrow, it's for sure, being regulatory compliant and serving the customer, but it's about looking at potentially our value chain in a very different ways, in serving the customer and delivering that customer experience engagement in a very unique way. We already talked about orchestrators. For me, is look at your customer journey, You have to break it into nodes. You may have some things you are really strong at doing and some things you are less strong at doing. It's where you start looking for other partners to embed their services within your value chain and start building ecosystems which are very, very difficult to copy, such as, big names we have learned about for the years, right? Ping Han and Zhonghan are very renowned in embedding ecosystems. So it's about shifting as well our mindset around how do we deal with the protection gap and look at ecosystem thinking and partnership in a very new way.
Brilliant. And so I'm interested as well, Yuri, your perspective of talking to both insurers and insurtechs indeed around the world. Are you hearing this? Is that a consistent viewpoint? Is there anything else as well that comes to mind?
Yes, Matt, it's absolutely consistent, and I would like to add a piece to this reasoning, connecting to what Sabine was mentioning about embedded insurance, often seen as Affinity. It's true that embedded insurance can somehow be seen as an evolution of Affinity, but with the two big differences that are boosting embedded insurance and make it much more than Affinity. First of all, the digitalization of our economy. With the growing digitalization of businesses, the growing usage of digital channels of people, today, almost every non-insurance company with a customer base can be potentially a distributor of insurance in an embedded insurance way. So this means multiplying by 10, 20, 100, I don't know, the volume of business of traditional Affinity. And secondly, there is another aspect to be considered, that not only embedded is empowered by digitalization, but what is happening today, and it is started in embedded finance, and now it's also happening in embedded insurance, is that many new companies, new digital companies, are created having financial capabilities and insurance capabilities as native features. So it means that insurance is not only something that is added to a value proposition of an existing company. Insurance capabilities today are native features of non-insurance companies. And this means opens a completely new scenario compared to traditional Affinity. We see this applied in, as of today, in many markets. At the Observatory, we have mapped between 30 and 40 different markets where embedded insurance is applied. I'm sure that in 2-3 years' time, those markets will be 2 times or 3 times this size. We have great use cases both in personal lines and in commercial lines products. And really, there is not today a market channel that cannot be considered as a potential for embedded insurance. So yeah, this is one of the things that we are observing. And for me, probably the most important and significant thing is that this insurance capabilities being native features of new companies. And this opens a completely new scenario and provides insurers the opportunity of doing business in a different way and of availing of new untouched customer bases of people, businesses that today are not insured. And yeah, this is for me the best representation of the embedded insurance potential.
Brilliant! What a comprehensive roundup. Thank you. And also, I think quite a lot in that to kind of lead us onto our next question, which I'm wondering. It leaves me wondering about some of the the practical challenges of how you tackle all of that. And I just made some notes as we were chatting, and whether that's a fundamental shift in mindset from considering, when we talk about embedded insurance, is it just an affinity play, or actually is it something else, to closing a protection gap, pretty well understood, through to the fundamental role of partnership and people's levels of comfort. And Yuri, then you also mentioned that actually no channel is potentially sits outside of embedded insurance. And so actually, on top of all of these ideas, the scope is pretty vast. How do you start breaking that down? Have we got some examples of how people are tackling it, or do you have any thoughts or advice on all of that? Or even would you like to reframe the question, because I've opened up a potentially enormous one? Who would like to go first?
I can start with an example where, I cannot name anyone, but when we think about embedded, we often think about personal lines. So, how you may be buying your Expedia, trip, and then you get your travel insurance, embedded and popping that you want to buy travel. So that is probably some of the basics as to, how we may relate a little bit as to where, embedded offer may appear. Other areas for me, which are probably the most interesting one, is when you start actually coming out of insurance, because when you actually look at what embedded means, is when you actually start mixing non-financial product with financial products, which means you are truly looking at the customer experience, customer engagement, and actually building an engagement which fulfill a very macro, potentially customer segment needs. So you have to think niche potentially as well to solve for embedded. And so every product and services are built for that specific profile, that specific customer group. We see now new bank doing LGBTQ banks. We see women health products being out there. I know in insurance, we need to be always careful around that gender, compliance. But what you find, there's a level of macro happening. Where I think is the most interesting is commercial lines, because it's not always obvious, but there's been, great companies out there which have been working with insurance companies, and you mentioned the automotive industry, where they are starting to build end-to-end offerings for a very specific customer segment, building, I would say, SPVs or new ventures, where they are targeting a very specific group of consumer or sub-customer by aligning technology such as the Internet of Things with artificial intelligence, with other capabilities, risk mitigation capabilities within insurance, to start providing a completely streamlined, seamless, and friction-free engagement experience to, for example, deal with business interruption. So I think as part of the problem we are solving for, the challenges, is you need to think about the problem differently. You need actually to potentially welcome others into your ecosystem for it to work. And that other may actually mean your customers and other sectors, adjacent sectors, to actually solve for the customer in very unique ways.
Thank you, Sabine. And Eric, you feel like the natural person to ask the question to, given you're on the front line of conversations with customers, and no doubt the practical challenges that they're looking to overcome. Yeah, so I must say I lost the connection for like 10 seconds at the end of your question, but I think it's about why should we be the ones who deliver the solution? Is that correct? It was kind of some of the the practical challenges seem pretty broad, and so how can we identify a start point for these? How might you tackle something that seems so broad and amorphous? Yeah, so I think it is a challenge because it could be a lot of things, and I don't think we're at a point yet in this evolution and development where we can say, okay, we've reached a state that is
in a steady state, right? We're in a reasonably dynamically evolving environment, which on the one hand is great. On the other hand, also means that certain solutions that we provide today is maybe not exactly the pure play form of what we can imagine would be possible or could be possible. Sabine mentioned the as a service components, or you could think of embedded insurance also. So why actually embedded insurance? It could even be embedded more in the sense that it's pure risk management that gets added to anything, right? But I think the realities are that we're in a regulated industry. That means if you want to do insurance, you need to have a balance sheet, you need to have capital there, and so on. That means for certain players, right, it just doesn't make sense to do it themselves. It might not be the most profitable thing for them to do, especially not in all lines of business. So when it then comes to how do you offer it, we as the providers for these solutions, we have to balance the, let's say, the complexity of being able to offer a broad range of products. How does that work on our platform? How do we, run this in a way that doesn't create the same complexity than in-house on our side? Hence, we have a platform, digital and no paper, microservices, blah, blah, blah. And that allowed us, for example, at Element to launch 45 product partner combinations in 21, of which half, a bit less than half, was with new partners. And that is one a week, basically. That's a lot, right? If you think about how difficult it is to launch an insurance product, that you need to be able to do. But you're right, on the other hand, is everything that we do exactly what we could imagine doing if there were no constraints about funding and whatever? Of course not. We live in today's world, and we have to do today's business. But can we imagine how certain things would look like in 5-10 years down the road, once we've everyone has learned that this is the way of doing it? Of course, things will be quite different and much more radical and even faster. I still believe it's one of the things that I repeat often, that the new frontier will be not turnaround times for underwriting, it will be turnaround times for product launches. Therefore, the time it used to take to underwrite a risk will be the time it takes to launch a product in the future, like a day or maybe even instantaneous.
So I've got another question, just building on that then, Eric. And at what point does it make sense to engage with partners then? What are the I don't know, what makes a successful partnership with an insurer to tackle these challenges?
Well, first of all, the partnership doesn't have to be with an insurer only. It can be with an intermediary. MGAs
Sure.
are great partners for these, or enterprises. I'm tempted to touch the question that was asked by Magnus in this context, because I think
it's a good time.
Am I allowed to? Okay, because then I would
Yeah.
say that outcome that Tesla does its own insurance company, I don't think it's the worst outcome at all. The worst outcome is that automobile manufacturers don't do anything, but rather put a tender out every year to 10 insurance companies for products where basically everyone has to compete on commission, and therefore the actual quality of the product, the use that they offer to clients in the end, might not be as good as if it were really truly designed to fit that ecosystem and that purpose, right? To the point that also Sabine made earlier. So I think that is the true strength. And then if the ultimate logic is that it's so strong, the new quality of these products, that you might want to integrate it into your own product as another player of that ecosystem, then so be it. Because for every product that, in the example Tesla integrates, let's say motor third-party liability or own damage, with their own insurance company, there will be 3 other products like leasing return, test drives, whatever you have, insurance that they will not want to do themselves, and there will be others who can add that to their fledgling portfolio, so that it's not just 1 or 2 products, but actually maybe 5 or 6 or 7. And we're very happy to do that. That's the same when we talk with big insurance companies. Usually for their number 1 and number 2 problem, they call McKinsey or BCG or someone else. But from number 3 onwards, we're fair game, right? Because if it's an insurance problem to tackle, we are pros in that, and we can help as well.
Brilliant. Big question there, Yuri. I'm also wondering whether your experience across the world also adds anything to that. Whether you've got any other experiences or perspectives that you've got yourself or heard.
Yeah, there is when we talk about because when we speak when we reason around embedded insurance, but also open insurance, but embedded insurance, there is it's about different organizations doing different things that collaborate for a common purpose. So it can be one-to-one collaboration between an insurance provider and a distribution partner, or very often, in 95% of cases, there is a tech enabler that enables the 2 companies to collaborate, and that provides first of all, the technology for the collaboration, and in many cases also other things, product design, brokerage, license. Very often they are MGAs. In some cases, they are insured themselves, like Element. So collaborations are a very important part, not only for making embedded insurance real, but also for making embedded insurance programs perform well. So what we are observing at Observatory is that there is a golden rule for making of an embedded insurance program a successful one. That is having the distributors and the other parties, enablers, insurers, aligned and fully committed and accountable for the final result. What I mean that very often in the past we have seen also embedded insurance opportunities with big potential, so big distributors with 100,000 customers, million customers, so big potential, a big fish for an insurer. And we have seen those collaborations not working because the distributor, for the distributor, the insurance was not a key part of its offering. It was intended just as a nice to have thing to offer to the customers. So it's important, mandatory. The golden rule is having all the players aligned and committed to the final result. There must be a full alignment among them. They must be committed, and very often we see that this happens particularly in Asia. That is very advanced from this point of view. That the kind of collaborations that work best are when there is a joint venture between the distribution partner and the insurer, which is the maximum level of commitment and common effort. This is what we're seeing. This is the golden rule for having an embedded insurance program work. So it's important that all the parts are understand each other, they speak, they test the product, they share data. Data sharing is another important part because very often distributors have much more data about their customers than the insurers. So it's important that there is full data sharing, obviously complying with the regulations, but there is a rich data sharing between the distributors and insurers because the customer experience must be driven by this. The features of the insurance product must be driven by this. And to have this data sharing, it's necessary that all the parties collaborate and are fully committed with this venture. So this is really, one thing that has emerged clearly by our interviews and our researches on this topic.
And Matt, if you don't mind, I've seen the question from Jaideep. When I look at the question, what comes to mind is, for sure, in insurance, embedded is nascent, but there are a lot of technology and platforms already out there who are actually repackaging themselves as embedded solution. But we need to remember, embedded is not just about insurance. It's about combination of financial services product and non-financial services product. So it's always about focusing on the customer. And so to be able to focus on the customer, to be able to define the right proposition, you need to actually have a clear view on the direction you are going. So let's say if I were going to build an embedded insurance offer for, car, for instance, let's say electric cars, it will be a very different set of ecosystem build than if I were going to build it around travel or parametrics. So, starting with the customer, understanding the problem we are trying to solve for is going to be very important. And what you find is astonishing that you can find actually a lot of solutions. And I'm sure Eric would say the same with all the products they have been building at Elements, that when you actually start with the customer and understanding the problem you're solving and therefore building the solution, the pocket of partners for each products are very different. And I would like to echo what Yuri said. One of the most successful embedded insurance approach has been what we call SPVs, strategic partnership vehicle, where every partners have equity, have equity in the business, and so therefore people are measured on value, and and that's where you start building proper digital ecosystem. It's not just about the revenue; it's about shared benefit and shared pains as well.
Great, and Eric, anything to add to that? I feel like you tackled the big chunky question head on. Anything else you'd like to add?
Well, maybe on the sort of shared equity perspective, and it also links a little bit to for example, Tesla doing their own insurance. I have another example here in Berlin, which is Moving's a joint venture between Swiss Re and Daimler that focuses on insurance for cars, right, and insurance solutions, and that's a business, a project that I was personally involved in a former life, and I think it's another solution for what strategically needs to be addressed, the better fit of the insurance solutions to the customer need in a ecosystem where it's maybe not just about the car anymore, but about the mobility, where the car is a big part of it, but not just. Maybe another little angle on how insurance fits into the overall ecosystem offering to the customer. In insurance, isn't it one of the key principles that you need alignment of interest, right? This is when insurance works really well. So first of all, if the risk is not foreseeable, and secondly, if there's the same interest. So for example, if you buy life insurance, right, it's your interest that your family is taken care of financially should something happen to you. But it's equally your interest not to die, presumably, and so therefore this is a very good risk to insure, and therefore risk-based life insurance is very cheap to buy, actually, right? Now, one thing that I see an additional benefit of embedded insurance is that since it links true interests of customers and offerings in a certain ecosystem. For example, I really want to be in my home, my home to be safe and so on. So the home ecosystem, right? I think as long as you appeal to what people want from that home, the alignment of interest can be quite high. The only thing to watch out for, I think, in many markets is, in my experience, that the term insurance is sometimes also used for social security concepts that are actually not insurance, but tax redistribution driven. So for example, in Germany, the pension insurance, right? or the health insurance. In the UK, it's called the National Health Service, right? And not the National Health Insurance, because it's not an insurance, it's a service. In Germany, it's called insurance, even though you can't insure a family of 5 for 300 euros a month, but you can in Germany. So this is not pure play insurance. So if people have in their mind that insurance is a lot of bang for your buck, you get like ridiculous benefits for something that doesn't cost much, this is a little bit of a tricky thing, right? Because and I think it requires the communication effort of the industry to rectify that. But to my point, I think in a lot of ecosystems, the fact that insurance becomes part of something bigger, this actually is almost self-correcting, and therefore an additional benefit in terms of alignment of interest of all parties in the transaction.
Great stuff. So actually, we've just had a question in from Andy, which ironically enough, Andy's a plant, but I was gonna reflect on what we've just heard, and we're leaning towards some more specific examples of how products and services are being brought to market and precise use cases. And so, with that in mind, maybe let's answer Andy's question. So he says you talk a lot about embedding the quote and buy journey, but what are your thoughts about the customer value in embedding the claims experience and fulfillment within the broader ecosystem? Who would like to tackle that one first?
If you want, I give a practical example. Maybe we have an embedded insurance solution, which is a car guarantee business, so used car guarantees, warranties. You buy a used car and you bundle an insurance solution with it. If something is wrong with the car, you get money. And in that context, the partner we work with is an MGA, and they actually do the claims. Of course, we are the insurance company, and we will look at this and ensure that it all goes well. But they have a lot of experience in that business, and they want to handle it. And the way you ensure that there remains alignment of interest is that the car dealers who sell that, they're obviously interested in the business of bundling the insurance with the car, because it's another thing that they can sell for profit. And they will only have that continuous source of revenue if what they're selling is not ridiculous, right? And therefore, as long as you can dynamically price this, you can actually very well embed a claims experience, and it gives indeed the customer a service out of one hand, because where they buy the car is often also where they get it repaired, and so on. So I think there's great examples in that, but I think Andy is right. We're all a bit too product and distribution driven when it comes to that. The big benefits from the claims and after sales parts of embedded insurance are far from being addressed yet by what we all of us are offering in the market. And as a personal note, it's great to speak with you, Andy, again. We used to talk to each other a lot in former life.
Yeah, Matt, if I can also say something about this. This point from Andy is interesting because it touches a very important point when we talk about embedded insurance, that is the user experience. I guess that for a customer, one of the biggest benefits of buying an insurance from its software house, from its retailer, from its trusted brand is mainly also related to the experience connected with that insurance. So the ease of purchase of insurance, the fact that that customer already have an ongoing relationship with that brand, and so it unites under one single roof the services from that brand and the insurance. And when we talk about claims, definitely claims, claim management is the moment of truth for insurance. I'm not saying anything particularly new, but it's important in embedded insurance because it is under the umbrella of the user experience, And what I mean with this is that it's important, again, for having a successful embedded insurance program, to have the user experience aligned with the user experience of the distributor, that is the user experience that the customer knows. So it's important also in this case to have a full alignment and also a big availability from the insurers to align their business processes, their underwriting rules, etc., to align that and to make them flexible in order to provide an insurance experience that is consistent with the overall experience of the provided by the brand that offer that insurance to its customers. This is true for underwriting, that must be seamless and quick, but it's particularly true for claims. If we have all of this, this is an important point to have an embedded insurance program that works, that performs well.
And I would like to add a point from what Yuri said. Now, I think Yuri also you have highlighted when you start looking at generally insurance and how we deal with claim, we have core system, right? We're actually implementing a technology. Now, when you look at the world we are in, and what I've seen is that even, unicorns within our industry, even, startups, insurtechs are collaborating with other insurtechs to fulfill specific needs. So is it called embedding? I've seen, for example, some of the embedded health tech startups leveraging other capabilities to actually deliver on that customer experience, that really unique customer engagement, and may actually have different partners based on which offer is being offered to a specific customer segment. So claims can be embedded, but it has to be linked to the customer engagement.
Very interesting. So again, it's got me thinking about we're kind of exploring a direction of travel, and Sabine, you ended there on embedded health solutions, and we've seen less. Well, obviously we've seen more in the P&C space, but have we got any use cases or interesting examples from either health or life as well?
So I do, but I can't mention more, but I do.
Still under NDA. Okay. We won't contravene any agreements here.
But what I've seen is when you start looking at emerging environments, I think you're actually starting seeing embedded capability. When we talk about embedding insurance, I think we think about the protection gap. And the easiest way to deal with this usually is P&C. But I would say some of our colleagues in the market are actually looking at it really truly from a protection gap viewpoint. So therefore, looking at finance, lending, pension, dealing with financial resilience, and therefore ensuring that any segment of the population, an underserved market segment, can afford to have a good life and savings for later times. In the healthcare environment, what I can see is, that hyper-personalization we are talking about a lot. You have platform, if you read my article, you'll probably see that I mentioned one on the InsurTech Insight 2022, which actually look at work either with big payers or with specific insurance companies to build programs which are highly hyper-personalized. And the capabilities which come into play for sure are very much what I call infrastructure-based, which would include, therefore, own capability, but also partner capability to solve for the specific payers' needs. But also, therefore, would also leverage, when you start talking about servicing and claims, the very best which are available to fulfill that payer or that insurer's requirements.
Maybe I have something to add on the health topic as well, and because there are actually health-related topics in P&C as well. For example, in accident insurance, right? That has a lot of these components where how you deal with a claim there, It's usually not done by an artificial intelligence. When somebody had a motorcycle accident, then it really requires the help of the insurer. So the way we would deal with an accident claim, which is a product that we have in the market, is very different from how we would deal, for example, with a pet health claim, because pet insurance obviously is a P&C line of business, because a pet is a property, a good, a thing, right, by in the definition of the law. But if you think about it, it's not exactly how we feel about it, right? And so therefore, I think it's a huge growth area, and it's one of those things where, you know, I think the way how claims determines the outcome of that line of business, both in terms of your profitability as an insurance company, but secondly also in the customer experience, is just absolutely crucial. Because it's true for many like reasonably high frequency lines of business, but for pet in particular, you have a lot of claims, right? Like vaccinations and all that stuff, which of course you have to reflect in your premium, right? And so therefore, you know already if somebody insures a dog, and I'm sure many of you have insured your dog, you know already as the insurance company that when roughly you will have interactions with that customer, and then it really depends on how you deal with that. Obviously, nobody would want to have a vaccination claim if that is covered by the insurance policy denied for no reason. It's just a hassle for everyone, and so therefore, this is actually also a possibility to use insurance as an enabler for the ecosystem, a positive one. Why? Because let's assume you bundle the pet health insurance with something bigger in the whole pet ecosystem. And let's assume that since for most dogs or so, you can reasonably predict, you know, that a big chunk of the insurance policy is actually, if we want a little bit of money swapping, right? Because it's kind of clear that which vaccination and what will come at what point in time. But if you do this well, right, it's actually a positive engagement point, right? You can bundle it. There's been things in the market where it's bundled with certain type of dog food and all that. So what used to be a bit of a scare, right? When banks used to buy insurance companies to do bank insurance, the first thing they would always do when they wanted to sell life insurance is to sell the health insurance company, because it could damage the brand, right? If you say no to a health claim or so. And look how this has changed in, for example, the example of pet health, where it can be a positive thing. So absolutely, I think we need to focus more on the after sales aspects, because for every sale, you can have 10 claims and 3 contract changes, by the way, which is also an important after sales process, MTAs and so on. Yeah, so that's what I wanted to add quickly.
Yeah, Matt, if we have time, I wanted to also to add one thing in this regard, talking about health. If we look at how the COVID pandemic impacted our public health systems, it impacted them harder, and it made emerge all the weaknesses of our health systems, no? That are reactive. They are based on doctors, hospitals, healthcare professionals reacting to an health issue of a person, and this model is not sustainable anymore as it is today. The trend is to move towards a proactive approach. That is not only taking care of people when they're sick, but it is collaborating with people to make people more healthy, and in this way also solving many of the issues of our health systems. And in this, embedded insurance and insurance companies can play a big role, because they can this transition will create plenty of opportunities for insurers to embed their solutions into preventive care, non-insurance preventive care solutions. So this switch from a reactive model to a proactive model will probably be, at least in my opinion, one of the most relevant trends that we will see in healthcare and in health insurance, and it is going to definitely happen health insurance as another market that where embedded can play a role.
Brilliant, thank you, Yuri. Guys, I'm conscious of time. We've got probably 3 questions which have popped up. Maybe let's see if we can answer them and then wrap up. But can everyone see? We've got, so how do insurtechs focusing on embedded insurance compete with large general consumer platforms like Amazon or the like in Europe? Additionally, what kind of advantages will insurtechs hold against carriers that develop these products themselves?
Well, it's you know, if you, I mean, does Amazon, you know, want to go into insurance? As Google wanting to go into insurance? This goes back to actually partly the question. What you find is a lot of those platforms definitely leverage insurers and in some case market insurtechs capabilities to position insurance offerings. Do insurtech really want to compete against big tech? I think there is enough in the market to so far not having to compete with them, potentially. But that goes back into, you know, really understanding problems need to be solved and actually focusing on the niche market that is not being served for right now, right? There is a lot of markets that need that help. And so therefore, when you look at insurtech or carrier products, it's all going to be around differentiations, I think. And making it easier for a customer, a consumer to be able to, I know we talk about distribution and sales a lot, but it's the end-to-end engagement, which need to be completely seamless, friction-free, a little bit like, you know, the experiences we have just using our iPad or watching Netflix maybe on TV.
Brilliant. Thank you, Sabine. How about, so we've got another one which says, do you suggest having a white labeled insurance product in embedded insurance or keeping the carrier's brand for credibility?
That's an interesting one. I think I have an example where Element, we helped with an insurance for a football club, Versicherung 09, which is Borussia Dortmund branded insurance scheme. Borussia Dortmund, probably most famous for its former coach, who is now coaching Liverpool, Jurgen Klopp. But anyway, so they have an insurance policy which is branded Signal Iduna, because that is actually also a carrier. It's a partner, but we worked with Signal to build the actual policy. The reason why it makes sense to have Signal Iduna is because they actually also branded the stadium where they play. So actually, when you play FIFA online on your PlayStation, you can even see the insurance advertisement when you play the computer game. So I think it's much more, it's multi-dimensional nowadays, right? How this could play. In other instances, it might be more beneficial to not have an insurance brand, but actually have the brand of you know, the company who's selling the solution. For example, we have a collaboration with Vodafone about private cyber insurance, and of course, it doesn't say Element. We are a B2B company; it will never say Element anyway. But there, the solution is branded Vodafone because they want, presumably, that their customers think of Vodafone when they're safer, right? So I think both ways goes in my view.
Yeah, that sounds sensible. Review each on its merits, but actually thinking about, you know, what are the broader opportunities around it to leverage a partner brand. Okay, we've got one final question. This one's specifically to Eric. So warranty gap or warranty or gap insurance. Are there any ready examples within embedded insurance ecosystems?
Many, actually. I think a lot of our partnerships from last year and then before are actually in that space. So warranty, extended warranty, and gap insurance is something that we do in many sectors. So both automotive, but also for goods like kitchens and watches and anything goes, right? I mean, this is a line of business which has huge demand. Why? Because well, why? We have a view why, but I think in simple terms, you could see that a lot of people tend to rent things nowadays versus buying them. And if you rent them, and then a kitchen, for example, is a long-lived good, maybe you want it to be in good shape for at least as long as it takes you to actually pay for it. And so insurance can make sense. If you bundle it again, you know, with the purchase of the good, it can lead to good alignment of interest. Yeah, I think there's a lot of good examples. The thing with these things, of course, is that it requires a bit of technology also, again, on the claim side and so on. If you think of, I like the question earlier also about, you know, the Amazons and so on of this world, because if you think about it, or the Zalandos, they have a lot of returns as well. I think it's not so different from us, actually. You know, like they get their packages returned, and I think in the old days a lot of that stuff would just be dumped and so on. Nowadays you're not allowed anymore. You have to actually deal with it. It's a bit like an insurance claim, right? It's like after sales, it's coming back and you have to do something sensible with it. You can't just pay out or ignore it or something like that. So maybe it's actually not so different after all with this whole circular economy. It's like a financial stream in insurance, the premium and then the claim, and everything becomes a bit more alike. And then in all these ecosystems, you can all blend together. And this could be a nice vision for maybe 20 years from now then.
Well, what a wonderful way to wrap up today's discussion with a sort of a picture of a utopian future. I love it, Eric. Thank you very much. Guys, I think that's everything that we have time for today. To everyone who's joined us, thank you. We really appreciate your time. Of course, to the panelists, equally, I know you're all incredibly busy, and thank you so much for making the time to spend with me and answer questions. It's been wonderful having you here. And of course, we'll be making this available for everyone to make use of and share. And finally, apologies for the fact that my head has I've gradually become a disembodied individual as the lights come down, and I neglected to turn the lights on before we started. What a way to finish up. But thank you again. Guys, ciao, good evening. Good to speak to you soon.
Great one. See you all.
Bye. Thank you.
Bye.
Bye-bye.